All right, traders, hold on. Let me just get this all. I just want to make sure everybody knows I'm starting over here. Okay. Good morning, everybody. Let's see here. We have a little bit of, sorry, I'm just making some adjustments here. Stocks continue to move higher, and actually the the sterling is getting up towards resistance. This is the 140 level. I think this is really key, how we react here. Let me remove this really fast. And I have an order out at just above 140. But let's see how accurate it is and where exactly. All right, so you can see the 50% retracements 140.17. I am going to put that out there. Have to make some adjustments because my order was at 12 for some reason, which that makes sense. I mean, makes sense that we could push just above 140 towards that resistance. So let's put that in there. 140. I'm going to put in 140.15. Okay, and you can see this is the previous channel too. So we're pushing all sorts of resistance around here. Support intraday, and this looks like, by the way, this looks like every dollar pair. Just FYI, gold crude is just ripping again, following the OPEC cut news this morning. But every dollar looks just like this. Looks like a wedge, right? So that means, in my opinion, that this is going to be probably pretty important. This whole area, which I'll write down 139.25. For the sterling, right here is all pretty good support, because if we, let's say we reverse here, let's say we do this, first of all, you got to get, underneath this trend line, this one right here, this trend line, you got to get underneath that. Then you'd have to break below, this previous resistance. So that'll put us under some pressure. So there's a lot of support down below, to get it to reverse again. But, that's possible with the dollar today, especially after, stocks look a little heavy right now, but it's amazing because soon as the stock market opens, the flows come in, and then, so it's kind of like almost anybody's guess at that point. You got to see how the market reacts anyway. So the euro has actually been pretty slow going as far as this move has gone. I'm kind of worried that the euro, doesn't have a whole lot of life in it, but I guess right here should be really good resistance at 119.80. If we can make it up there. Let's get rid of this 161% extension, and let's move that. And, at this moment, it looks like a pennant, but we do have pretty important data coming out today, the PMIs. So maybe the PMIs might be what moves the market more. I want to take it where this move started. So we're at basically a 38% retracement. We can go a little higher. We can go to this spike right here. So the 50% retracement comes in around 120. So I would think that the 119.85 level is going to be good resistance. Support is going to be this spike low here. Again, there's this trend line, but this spike low I'll be more concerned with, which will come in around 119.10. Okay, the Aussie dollar. I had an order at 80. I pulled it when I got up this morning, and I probably should have left it. This is the 50% retracement, comes in at 75.95. The reason why I pulled it is I got hit on a bid on a Euro Aussie, like a smaller piece that I wanted. And I'm like, okay, I needed to reduce, just make sure I didn't get too much Aussie exposure on the short side, but I still feel that you gotta sell into these rallies. Remember, this is, let's not forget. I think people tend to forget that this is a bearish breakdown out of a triangle, right? I know we're recovering right now, and people are going, "Oh, look at the false breakdown." You know what? I'm not in that camp. I'm not yet. I think we'll find some resistance at, let's just call it 76 cents. Okay. Support. I think we got to watch this support here. Let me delete this. Now that you've seen it, you don't need to see it again. So if this channel, is playing, that means support is down here at 75.25 by the time we get down there. Okay. Kiwi. No, the Kiwi's almost at the 38% retracement. It comes in at 70.73. So I'm going to write down 70.75. Support will be right here. It's very key support. Basically, it's at 70 cents. And I have the Aussie as bearish, but I'm going to have the Kiwi as range bound. The reason why, guys, the reason why I'm going to put that in range is just because, I don't have a, unless you see something different than what I see, I don't see us coming out of a pattern. Maybe I guess we could say that this was a triangle as well, I guess, But you notice how the Aussie reached lower and the Kiwi didn't. So I'm going to actually keep this in range for now, just for now. Although I think you have to have more of a bearish bias, just my opinion. Dollar Canadian. So the dollar Canadian's like a lot of these currencies, you can see this wedge that's playing. Here's your hourly. We're just skating across the bottom of this wedge. 50% retracement comes in at 122.50. Also, double bottom, right? Double bottom, extension, target. Right? Target was met. So we should have a lot of support around here, I would think. Resistance, we have to get above this resistance, but more importantly above that one, I think. And that comes in at 123.30. And because crude oil is so damn strong right now, you got to be really careful with it because, I actually think this is a very impulsive move with the dollar Canadian. But the one reason why we're not getting above, we're not holding up is look at crude. Look at what crude oil is doing, guys. We're almost at $74 a barrel. I mean, just continues to rip. So anyway, I mean, I'm going to keep it in range just for today, but dollar Swiss. Now the dollar Swiss is holding up. This is actually holding up really well. If I was bearish dollar Swiss, I'd be worried about this because yields have been coming down a little bit today, and it has not affected. They were they just bounced, but they were coming down earlier. The dollar Swiss isn't pulling back, and that's fairly impressive here. So I'm going to write down support as being 91.60, resistance at 92.40. I know we're right off of support too. So I'll have to write down two numbers. Hold on. 91.60. And then below that, I think we had 91 cents, but over here, just in case. We break down a little bit here, and this is 92.40. I mean, look at crude oil, 74 bucks. Wow. US dollar, Norwegian krona. Well, one of the reasons why Norway can't rally is same problem that the dollar Canadian has. Although, I'm looking at this channel, which obviously can extend further lower, but we have a 50% retracement at 848. Resistance is right here at 856. I think it's holding up well. Like I said, even with crude oil, as weak as it is, it's holding up well. I mean, excuse me, as strong as crude oil is, the US dollar and Norwegian krona is holding up well. And remember, we came out of this bullish wedge. Very, very strong move up. We are pulling back. We're at near the 50% retracement. We could probably come all the way down to the 618, down here at 842 again. With crude doing what it's doing, it is possible. So just keep that in mind. Dollar MEX. Now the dollar MEX, I'm still bullish. We are probing, some supports right here. So 2020 is going to be support right through here. Its low today is 2021. So I'm going to write down 2020. We have to get back above the 200-day moving average, which is 2040. One thing that's keeping this thing capped is, stocks continue to be really strong. Dollar yen, big rejection up here. 111.13 is the 127% extension. We could extend to 111.25. I'm not sold on the idea that we're breaking higher. I'm just not. I mean, we can obviously break higher. I'm just not sold on that idea just yet. But where's support? I mean, this has got to be support right through here. This whole area. I know it's the channel support comes in a lot lower down here at 109.70, but I think we're going to find support ahead of that at 110.20. So I'm going to write down both. 109.70. 110.20. Oh, wait, did I? Oh, this goes here. My bad. Whoops. Okay. Let's see what stocks are doing. I'm assuming since we just opened, they ripped higher, which they did. I mean, look at the S&P. There's the NASDAQ. There's the Dow. Nice right at the open. Let's go to the S&P. It's just this market is so ridiculous. I'm pretty much fed up with the market at this point. I had high aspirations this last week that we're seeing some volatility, but you know, this kind of crap, when we sell off like this and then we reverse the whole move, it's like very frustrating. I'm sure you guys are equally as frustrated as well. So 42.65 is resistance. Support is, I don't even know. We'll have to figure that out. So support here, probably, let's just assume these highs hold. So support would be, would be a 38%. So that's going to be 42.20. So I mean, I'm just going to do that. And then obviously above that is 4,300. Alexander said, me too. I do not understand why it keeps continuing up and up. It is frustrating a lot. Well, I mean, we all know the reasons, right? I mean, the reasons why the market continues to go higher is because the market understands that the Fed has its back. So, you know, that's it. I mean, that's all there is to it. You know, continued liquidity, market, you know, I mean, that's the only reason. Gorgon says, do you think the dollar Canadian might find support here because of bad data? I don't think that really matters. I think the what's going to matter today is the PMI data out of the US. So that comes out in about 10 minutes. I'll stick around for that too. So that's going to be important in my opinion. You know, this PMI data that's coming out, it's going to be important. Where am I at? Let's finish this up. We've got 10 minutes to do it. DXY. Support for the dollar index is going to be right here at 91.45. Resistance will be obviously this channel, but remember, everything's in a wedge. This might be actually a wedge too. The rest of the dollar pairs pretty much look like this. So I think we got to prepare for either. So the 38% retracement again is 91.45. Resistance will be 91.90. Gold. Gold just spiked higher. So gold's trying to move out of this little wedge here, but gold's trading heavy. I still think it's trading really heavy, actually. Given the fact that gold is just not responding to dollar weakness, I think if you're long gold, you're probably wondering what the hell is going on. We're just not seeing any movement here. So 1800 is resistance. Really key support right now for gold is 1755. So I'm gonna put an asterisk at that number. I think it's really important now. I do think we're bearish well below the 200-day moving average. And silver, similar, we're just trading kind of heavy. Supports at the 618. I think resistance is a spike high right here, which you see here. So 2650 to 2560. 2560. 2660. Or is it 2650? 50, sorry. So Bitcoin, 30,000 obviously is really key. Where can we bounce to, I guess? %. So the 618 actually matches up with this high right here. So I think this is going to be pretty good intraday resistance. So that's going to come in at 36.5. Okay, so let's do that. 30K obviously is really key support. 36,500 and then 42,500. And obviously that's really key resistance. So while we're below that, I still believe we have to be bearish. Okay. So here's your bias chart. Your bias chart is finished. God, look at crude, man. Unreal. At what point does this move higher in crude? At what point does it really start to affect
goods and services? It's already doing that.
Yeah, I mean, when does this really start affecting
choking the economy, basically?
Yeah, behavior. Yeah, behavior wise. So it's interesting.
I think we're getting close to that level.
I mean, look at crude. I mean, it is. I mean, I understand it's still bullish until we get to that 74, 75, or at least that. I think it's just bullish while we're above 70. But man, it is just. At what point does it really start to affect, the consumer? So, where the hell is my crude oil? Just went right past it. So we're almost there. Yeah, here we go. And I mean, actually we could actually go further than that. That's initial target. That's the other target. So this is all target area, right? So really strong. So how you doing, Stel?
I'm good. 2 more days of school. Not that I'm counting.
Nice. And then next year, what class are you going?
Yeah.
So we got 2 more days of school, and then you are going to be bombarded with girls again.
Yeah, the good thing is that they're going to be at the swimming pool all day, so I'll be somewhere very close watching with my laptop. So I'm good.
I'm not sure how good that's going to be. It's so hot today. I hope we don't have more days like today, because it's like frustratingly hot.
It's okay. I put ice cubes every now and then in the pool. It works.
So guys, we have some PMI data coming up here in a second. Steve, I'm gonna let you take over, but I'll stick around with you guys. I actually have to take a break, but I'll stick around for just a couple more minutes. As we discussed earlier, and here you can have the screen. As we discussed earlier, the economic data will matter what are you thinking here?
Well, I think the same as we said on FA.C.E., economic data that has shows a clear picture or a clearer picture of inflation is going to be watched very closely by the markets. Other data is probably still not going to matter that much, but inflation is the one, because this is what's going to be making a difference for what central banks do, or at least what they tell us they're going to do. Because I think at this time, central banks like the Fed, they obviously care about employment and all that, but their focus is on inflation now, because this is what people can see and they can actually feel it in their pockets, right? So, so I think that's what they're going to be looking at. And frankly, you said it, about oil. We went from, okay, forget the negative rate, the negative price from the futures, but we went from $20 oil, $25 to $75 in a year. I mean, that's an amazing increase, and we are seeing it everywhere.
Lower than that, Celio, actually.
Yeah, true.
$11 was the low for the continuous.
Yeah. So you're seeing this everywhere. I'm seeing this in the supermarkets. You see it everywhere, and it's going to come through in product prices, in wages. You're seeing average wage growth rising quite a bit in in the UK, in the US, everywhere. So you're going to see that. And what do the central banks do? What can they do? With debt going up in the US, trillions upon trillions, it's very, very difficult to be hiking rates.
And the recovery of the economy almost exclusively based on easy money.
Yeah, I would say exclusively, not almost exclusively, but yeah. So, what do? They're in a very difficult situation. I mean, I really wouldn't want to be them. What really should happen is they should raise rates, let the markets take the beating that they need to take. Because we've abolished recessions, we've abolished down legs in equities, and then you build back better, like somebody said at some point.
Yeah. So what you're saying is, let the market take its medicine.
Yes. And every year we don't do that, it's going to be worse and worse.
The more we postpone the treatment for the actual disease, the worse the disease becomes. It's just not visible yet. But
you're amazing with your metaphors, man. You're amazing.
Yeah, when the day of reckoning comes and we are forced to swallow the pill, it's going to be so much more bitter, literally.
Yeah.
Well, here comes the PMI data. It's coming out in about 2 minutes. And I hear what you're saying, Stelios. I agree with what you're saying, but let's all understand that the Fed's not going to do that. I mean,
yes.
We can
and the Fed is not going to do that because the Fed is not independent. It is 100% political, as the rest of the central banks are, right? The overwhelming majority of them, anyhow. And that's a big problem because the decisions they make are not based on economic decisions, but on political favors and political decisions. That's the biggest problem.
Yeah. Well, guys, we have the dollar reaching ahead of this data. It's reaching lower, and we see the euro dollar is approaching the 119.60 level. The cable's almost at 140. So what do you make of this? The dollar move. We have equities.
Metals going higher.
Bid. Yeah. Metals are bid. Everything's looking
the market expecting a weak number.
I think the market is expecting a little bit of a weaker,
stronger PMI, weaker services. PMI.
Which kind of makes sense because manufacturing is influenced by higher prices of goods. Yeah. Okay, so one strong, 1 week. What's the dollar doing?
So far, the dollar still is at the lows of the day, but it's not that I'm seeing like an acceleration lower following the data. Seems almost like that was completely priced in.
Yeah.
So, yeah. To be honest, I mean, it was a bit.
Well, the services PMI is really weak.
Yeah, it was a big miss.
Yeah, much weaker. Yes, much weaker.
Yeah. So, well, the dollar's taking it in the chin as a result, and stocks are stronger because they just imagine the Fed's just going to be continuing along with their
Whatever.
their rhetoric. So, all right, guys, take it easy and have a great one. I'll see you guys during the daily roundup.
You do, mate.
Thank you, Blake.
Bye-bye.
We do have some more numbers, new home sales in 13 minutes or whatever, but we'll be here to cover that, I think.
Yeah, and I doubt it's going to be a really, market moving event, but whatever. I mean, PMIs were clearly more important, but still, it's not like
the
market preemptively like responded to whatever. And yeah, let's see. Anyhow,
Simon says like 64.8 150 is flat, and we call that weak. Well, it's weaker than expected. That's the whole thing. What's the market implying?
Yeah, so supposedly the market is already has already priced in expected. So when any deviation from expected is what the market is going to react to.
Yeah. Yes, one thing worth mentioning, which we didn't talk about on FACE, is we haven't talked about this for a while, about COVID and vaccines and all that. And I was reading today about this Indian variant, which is in the UK, and it's apparently rising now, and the hospitalizations are rising again. And it's like, Jesus, will this thing ever end? Because you know what it's like. There's going to be variants upon variants, just like the flu every year is slightly different.
Yeah, my wife is sending me some articles, etc., like Delta variant, Beta variant, Sigma variant. I'm like, stop sending me stuff. I'm not even reading them.
Stop sending me Greek letters.
Yeah, I mean, literally, I'm just completely bored of all this.
Amira says the Delta variant is in Israel as well. Yeah, it's unfortunately this is going to be happening all over the world, and obviously with lesser effect as we go along because people are going to be vaccinated. But still, it's not like we found the vaccine, it's eradicated, we move on. And this is going to be, I have the flu shot every year. I'm guessing I'm going to be having two shots every year now. So.
That might be the case, Telio, but to be honest, in my opinion, you get your vaccine and then keep on living your life. Now, is there a chance that some kind of new variant that's not going to be, under the influence of the vaccine in having to do with protecting you or whatever is going to get to you? Yeah, I assume there is. But what can we do? I mean, as you said, with the flu shot, the flu has been with us for like decades. Yeah, and it's probably going to be there for many more decades. Same thing might happen with the COVID-19 variations. So, whatever.
Well, if I'm going to get a variant, I want to get the Delta Integrale variant. Okay.
Me too. Me too. The Martini edition, please.
Yes, exactly. Yeah, so I don't have much more else to say. I mean, we covered a lot of stuff on FACE, and today cryptos are still doing relatively well. Ethereum is stuck around 2,000 for a while now, but they seem to be recovering. And
here's Bitcoin on a daily closing basis. It held this channel despite having sliced through the channel and at new lows earlier in the day. And here is Ethereum that, at least in this exchange, incrementally dipped its toe below that spike lower by, less than $10, and has been recovering since. But as I said previously on FACE, I think we might see a little bit of a bigger rebound due to these technical events, but my gut feeling tells me that we still need to get a proper last leg lower and not this one. So I would still look lower in Bitcoin and Ethereum as long as we remain below these highs, like 41.5K in the case of Bitcoin and 2.8, 2.9K in the case of Ethereum. That's what I think. I would start becoming very constructive if we slice through like these lows and go towards 24 or even 20K, and I see some kind of stabilization there, that will make me a lot more, um, likely to start looking higher. Now, I'm not going to say to buy it myself because, although, as I said before, I'm seriously considering once this is over, if the environment has started getting frothy again in all worthless type of instruments, I'm thinking of buying some kind of a basket of meme currencies or whatever, like a small amount of them, because I do believe that as long as we keep on pressing in the same direction, having to do with monetary policy, etc., we might see another mania phase higher, right? And I'm not recommending that, of course, as a as a fundamental thesis, but this is what they've been creating. So, why not have like 1-2% in something that can have extremely high beta? So, but it's just like that's purely some kind of a gamble play, but not yet. I want to see lower lows and decisively lower lows. As I said, at least 24,000 in Bitcoin, at least, if not 20,000. We already spoke about crude oil. And yes, crude oil has finally made it to my last target here, the 161.8% extension at 74.63. There is no real reason to try to fade this move because it's still very strong. But as I was saying, I don't think you should be trying to join this move after it has literally in like 15 months, we've moved 7 times higher, right? So 7x from the lows in 12, 13 months. So I think I don't know what the reason, what the catalyst is going to be, but we're going to see some kind of a proper corrective move lower and fold sooner rather than later. And then and only then I will be interested once again in the upside, because I really believe there's a lot more upside coming for crude oil, as also is the case with natural gas, right? We talked about it. Natural gas, I redrew earlier today this triangle because the move lower looked corrective to me. I mean, the way we stalled and especially the way we're moving higher today points more towards this direction. And now we're testing the previous high at 339. So, I maintain a bullish bias here in natural gas. I think we're going much higher with 4.1 dollars being the next upside target, and definitely no reason to be bearish as long as we trade above 3.1. Now, having to do with precious metals, I said it yesterday, Blake said it today. From what I heard, I'm going to repeat it again. We're seeing a rebound, we're seeing a recovery, but seeing the nature of the previous move lower, I'm still inclined to believe that we're probably not done. We probably need to see a little bit more downside before we can start moving higher once again. I do believe that we're headed much, much higher. I just believe we're going to start that move from a little bit lower, right? So far, this confluence of supports in the case of silver, 200 EMA 61.8, so on and so forth, held. 61.8 also here holding in the case of gold. Start looking for a resistance though. 1807 is the first area of resistance in the case of gold, and in the case of silver, I think 2650 is the first area of resistance. So, a little bit of a reaction higher, but probably more downside before we can resume the upside. Exactly the same applies to copper, right? I said the other day, this is what we drew. Look for 4.36 to be resistance in this case. Palladium, as I said, we might recover all the way up to 2700, but we should see more downside there. Here is platinum as well. 1100, 1120, 1150, 1130 might produce a reaction for another leg lower. And of course, all that implies that the dollar is going to end this streak of down days. We're at the third at the moment, sooner rather than later. As I said earlier, 91 to 91.40 is a very nice area that I would like to see a reaction higher in the dollar, in which case I would be looking for another leg higher to unfold. And if we're talking specifically about the DXY, I would be looking for 94.50 as a good upside target, nice confluence of resistances that might signal the end of this rebound and the continuation of the move lower. Because, as I said, since day one, my medium to long-term thesis has definitely not changed. Let me open the question box. Still, Steve, your views on gold, please. Still bearish? Okay, yeah, I just read your question, but I think we covered that. Do you think USD might find support? Yeah, that was a question addressed probably to Blake earlier. But in any case, I have no problem having a look at USD as well. Now, listen, in the case of USD, I think we have a very clear area of support. We had a rectangle, right, which once we broke above it, that was clearly bullish development. We got an acceleration higher. Its trend line resistance was at 121.80, 90. So that's support on the way down, right? So I wouldn't want to see USD break back within that rectangle once again. So I would want to see USD finding a low anywhere between here and worst case scenario 121.80, 121.90. As long as that's the case, then yes, you can expect to see at least one more leg higher. I guess a move towards 127, 128 is very, very likely. Simon says, not sure you saw this in the EU early AM. EU PMI market average prices changed for goods and services. Meanwhile, rose at by far the fastest pace since comparable data for both sectors were first available in 2002, with prices rising in each sector at rates not exceeded for approximately 2 decades. Yeah, 2 decades. Yeah, I mean, we've been seeing this clearly. It's even worse in the US. And I think that anybody that actually shops or whatever is seeing it also in the supermarkets and in everything else, right? Prices have been going up extremely fast. Still, inflation expectations are ridiculously low. I remind you that just a few months ago, the Fed had an annual target for inflation of 2.4%, and we've already exceeded that in the 5 first months of the year. So we now are closer to 3% inflation for the whole year just by having 5 months into it, right? And the revised target that they gave is 3.4%, which is also ridiculous. They'll have to revise that once again. In my opinion, best case scenario, we're going to end up the year with a 5% inflation rate. And, they seem to be acting like it's normal, it's transitory. Sure, the rate of inflation might dip somewhat lower, but when you have a target of 2% and you end up with a 5%, yeah. By the way, we got U.S. new home sales worse than expected, 0.77 versus 0.87 that was expected. So, definitely decently lower than expected. And we even had a very, very, very slight revision lower for the previous data, but, negligible. So not really important. Minus 5.9 was the change in percentage points month over month. So very negative, right? And the previous one, because this is the big outlier actually, the month-of-month change for the previous month got revised from minus 1.9% lower to minus 7.8% lower. So previous month's data got massively revised to the downside, massively, from less than 2% lower that was expected to almost 8% lower. So yeah, US home sales seem to be plunging, at a at a very, very scary speed. Speaking of which, just out of curiosity, I had here it is. Yeah, the home builders ETF. Yeah, home builders ETF doesn't really seem to be doing bad. I mean, yes, it has been moving lower, but so far this formation looks corrective in nature. Let's see this divergence between data reality and home builders can exist, because one has to give. I mean, data have started turning lower in a very aggressive manner, and this ETF seems to be just consolidating its prior gains, which are massive, as you see, right? Really, really massive. So let's see. One of the two has to be telling the truth. I don't know which of the two. Let me see other questions I haven't addressed. In case somebody wrote a question very, very early on, because I was like 10 minutes late to join the webinar, just retype it, please. That's only if you typed it within the first 10 minutes of the webinar when Blake was still speaking. Now, let's see, STNG. Let's see what that is. Bullish. Bullish. Why? Because the type of, last time we looked at it, we were there clearly, right? And I said that we need to see some type of correction. We might go all the way back there. But this market decided to correct in time rather than in price, right? You can clearly see it here. So corrected in time, and this correction seems to be probably almost over or even over, right? So higher against these lows, against 2060, higher. ZM. Okay, this has broken out. Next target, 448. NVCR. This chart troubles me somewhat, I have to tell you. More than somewhat. Look at the RSI divergence as well, right? I wouldn't be buying it, I can tell you that much. This looks like it wants to do something like that, if you're asking me. PBS. I think bearish. There you go. And there's your implied target as well. 44.50. And we're currently at resistance, so quite a nice risk-reward ratio. RSI also not really frothy, clearly below 70. I think there is at least one more leg missing to the downside in this one, in PBS. FDA. Oh, the gap is FDA. You mean about this? Like FDA news, you mean, right? Okay. FDA related news. Let me see. Any more questions, guys, girls? Anything else you want me to check? Going once. Going twice. Netflix. Netflix. NFLX. Oh, yeah. What a nightmare. This was a very beautiful formation. Look how long I haven't checked this. This was a symmetrical triangle. It was obvious, right? The reason I'm extending it is because you never know. Sometimes it can act as support in the future. Really, this is such a mess. First of all, to begin with, I wouldn't do anything with it, right? For obvious reasons. Just look at this mess. But, you know, trying to define it as well as it's possible. Yeah. You know, above 459, no reason to be bearish. Below 563, no reason to be bullish. We're in the middle, nothing. So really nothing to do here. As a general comment, you know, something that has moved like this and has spent so much time like consolidating, chances are that, you know, eventually it's going to end up breaking higher, right? But who knows how much longer this can, like, you know, keep unfolding. So, you know, just remain patient and find something else to trade. Okay, guys, girls, have a wonderful rest of the day. Don't forget to join Blake for the daily roundup. Bye-bye.